Welcome back to the Malaysia Money Matters show. It's the 7th, May 25.
Good to be here.
Today, we're diving straight into the key financial news impacting Malaysia and, well, the wider world too.
Yep, you shared quite a stack of articles with us.
We did, and we've tried to boil down the really crucial insights for you. Let's kick things off with what's happening with Malaysian companies.
Okay, sounds good. First up, Boost Bank. They've been pretty active.
Active is one word for it. Nearly RM 150 million in loans disbursed to SMEs just since October last year.
Yeah, quite rapid. And the average loan size is around RM 300,000. It's reaching businesses in wholesale, manufacturing, retail, quite a few sectors.
It really makes you wonder, doesn't it? Is there a gap traditional banks aren't filling for these SMEs?
Well, it certainly suggests that these digital banks, maybe they were offering something more accessible or faster.
And they're launching a new digital platform soon, too, integrating money management, payments, all sorts of operational tools for SMEs.
Exactly. That could really cement their position if they get it right.
Okay, next, Favelle, crane specialist.
Right. They've secured 5 new purchase orders worth about RM 43.9 million.
For tower and offshore cranes. Deliveries mostly late 2025, one in 2026.
And the key thing, their outstanding order book jumped significantly. It's now RM 719 million.
Up from RM 528 million back in February. That's a healthy increase.
Definitely points to strong demand in, construction and offshore sectors. Looks good for them going forward.
Now, Gamuda, this is interesting. A deal with Pearl Computing Malaysia. That's linked to Google, right?
That's the one. Selling 389 acres in Spring Hill for RM 455 million.
But it's not just the land sale. They're also doing RM 1 billion worth of enabling works for a data center there.
Exactly. And analysts are pretty bullish on this. They think it positions Gamuda really well for future data center projects, not just in Spring Hill, but maybe Elmina Business Park, Eco Business Park too.
Given the demand for data centers.
Yeah.
Yeah, you can see why. Their current order book is already at a record RM 37 billion.
This could add significantly more over time, a really strategic move, it seems.
Sticking with data centers, LFE Corp.
Yep, they've secured a subcontract. RM 50.58 million for mechanical, electrical, and plumbing fit-out work.
Also an Elmina Business Park for a hyperscale data center.
It's an 11-month contract kicking off July 1st this year, undertaken by their joint venture, R&L Engineering.
Shows the ripple effect, doesn't it?
Wow.
These huge projects create work for lots of specialist firms.
Precisely. Good for the wider ecosystem.
Okay, shifting gears. Malakoff. They've raised RM 250 million.
Right, from their first Asian Sustainability SRI Sukuk Murabaha.
That's a mouthful. But basically, it's for green projects, right?
Exactly. Sharia-compliant funding for renewable energy and emission reduction. Things like co-firing biomass at Tanjung Bin, building small hydro plants in Kelantan.
And it was oversubscribed more than 10 times.
Yeah, huge investor appetite for sustainable finance. That's a clear signal.
All right, Mr. DIY Group. Their stock surged.
Unsurprising, given their strong quarterly results. Q1 net profit apparently made up 28% of the consensus full-year forecast.
Wow, that's strong. Analysts are positive.
Very. They're even citing potential upsides from U.S.-China trade tensions, maybe leading to better sourcing terms for Mr. DIY. Plus, they plan to open 190 new stores this year.
Aggressive expansion shows confidence.
Definitely.
Now, Hartalega Holdings, the glove maker. Bit of a mixed picture.
Sort of. Q4 net profit dipped slightly, but that was due to lower non-operating income. Operationally, things actually improved. Higher sales volume, better average selling prices.
And for the full year?
Full year net profit was up 5-fold, so a big improvement overall.
But they're still cautious.
Yeah, they see recovery in the glove sector continuing in 2025, but, oversupply is still an issue, and potential U.S. tariffs are a worry. Headwinds remain.
Okay. Heineken Malaysia. Pretty much flat net profit for Q1 FY 2025.
Largely flat, yeah. Supported by lower interest expenses and cost control. Revenue dipped slightly, maybe due to the timing of Chinese New Year.
And they're also cautious, seeing a theme here.
They are. Worried about consumer sentiment with inflation and those global economic uncertainties, again, tariffs being a big one.
Dufu Technology Corp. Now their Q1 net profit surged, up 57.4%.
Driven by higher sales of hard disk drive components, so good news for the HDD market. Seems like it's recovering.
But
they also flagged caution about the uncertainty from recent U.S. tariffs. So benefiting from market recovery, but wary of external shocks. It's a balancing act.
okay, an interesting potential development in the FBM KLCI. Ambank potentially replacing Hong Leong Financial Group.
That's the suggestion from CIMB Securities. It seems HLFG might fail the liquidity screening test for the index.
And AMBEG meets all the criteria.
Apparently so. Changes would take effect June 23rd. We should get preliminary results around June 4th.
Being in the KLCI is a big deal for visibility, right?
Absolutely. Can attract more investors, boost trading volumes. We've also seen some big market cap shifts since the last review. YTL Power, Petronas Dagon, YTL Corp up the most, Petronas Chemicals, CIMB, Axiata down the most.
And the banking sector still dominates the index.
Yeah, as of end of April, it was about 40.9% of the KLCI's weight.
Okay, last one on the company front. FGV Holdings. They're clarifying something.
Yes, responding to a report in The Edge. They say they haven't received any formal notice from Felda about a potential takeover or privatization.
They're saying privatization is a shareholder matter.
Right. This comes as Bursa Malaysia denied their request for more time to meet the public shareholding requirement. They need to sort that out by September 10th, 2025.
So, some uncertainty around privatization and definite pressure on the public spread.
Two key issues for them to navigate.
Okay, let's broaden our view now. International news. Global trade is still the big story, it seems.
Absolutely dominates, and China's right in the middle of it. Their central bank and regulators are holding a press briefing tomorrow.
To discuss what? Market stabilization.
Exactly. Policies to stabilize markets and, quote, expectations. It's happening amidst pressure from U.S. tariffs and general economic concerns. Expect some confidence-boosting measures.
They're also trying to keep the yuan stable against the dollar.
Seems so. Intervening to push back against a recent rally in the offshore yuan. Trying to calm the waters in Asia's currency markets. Taiwan and Hong Kong have also been managing their currencies.
Stability is key for their exports, I suppose.
Crucial. Big swings mess with trade competitiveness.
Elsewhere, gold prices are up.
Yep, extended gains, partly demand from China coming back after a holiday, plus a weaker U.S. dollar helps.
And trading volumes in Shanghai.
Record levels for gold contracts on the Shanghai Futures Exchange. Classic safe haven behavior in uncertain times.
Across the pond, the EU might hit back at the U.S.
Reportedly, they're eyeing about $100 billion of U.S. goods for potential additional tariffs if trade talks fail. This would be on top of existing steel and aluminum tariffs.
Negotiations not going well, then.
Sounds like little progress has been made. Could escalate things significantly.
Interesting timing, then, that the Bank of England is expected to cut rates this week.
Widely expected, yes. Partly seen as a response to the anticipated hit to growth and inflation from U.S. tariffs.
Some are even talking about a series of cuts.
Some economists are suggesting it, yeah. Shows how trade policy is directly influencing monetary policy decisions. Tariffs can slow growth, but also boost inflation, tricky for central banks.
Meanwhile, in Thailand, inflation actually turned negative in April.
First time in over a year, mainly due to cheaper fuel and more food supplies.
Which gives their central bank more room to cut rates.
Exactly. More flexibility to stimulate the economy and counter any negative impact from U.S. tariffs on their exports, without worrying immediately about fueling inflation.
Back in the U.S., their trade deficit hit a record high in March.
It surged. Businesses basically front-loaded imports ahead of expected tariffs.
And that contributed to the U.S. GDP contracting in Q1.
Yep. A clear example of how tariff anticipation can distort trade flows and impact growth figures.
And Wall Street wasn't happy Tuesday.
Nope, markets fell. President Trump's latest threats, this time about pharma tariffs, added to the trade war jitters. Some downbeat corporate results didn't help either.
Markets hate that kind of uncertainty.
Highly sensitive to it, especially in a big sector like pharma.
Finally, oil prices. They bounced back a bit on Tuesday.
Rebounded after that sharp drop when OPEC Plus decided to increase output.
But concerns remain.
Oh, yeah. Oversupply worries haven't gone away. And the potential impact of U.S. tariffs on global demand is still a major cloud over the market. Downward pressure likely persists.
Okay, let's shift to the political arena. How are governments responding?
Well, PM Anwar Ibrahim met with AMD, the chip giant.
Right, discussing AMD's role in Malaysia's national semiconductor strategy.
The PM sounded optimistic about the partnership. Shows a real focus on building up that high-tech sector here.
And the government's putting more money into Matrade.
An extra RM50 million, yes. Specifically to boost exports to non-traditional markets, Russia, Africa, the Middle East, South America.
A clear diversification play, trying to offset potential losses from U.S. tariffs.
Seems like a prudent strategy. Spreading the risk.
Trade talks between Malaysia and the U.S. have started.
Began Tuesday. Led by MITI's Deputy Secretary General of Trade, Malaysia says it's open to reciprocal tariff cuts.
But the key is,
the outcome must not harm Malaysian companies. That's the priority. finding a balance.
And media might have a special package for sectors hit by tariffs.
They're considering it. Details are still being worked out, likely depending on how these U.S. trade talks go. Expected by July, perhaps.
So a potential safety net being prepared?
Shows they're aware of the risks and ready to act if needed.
Moody's has weighed in too, warning about Malaysia's credit rating.
Yes, Moody's Investor Service sees tariff shocks as a key risk. Could disrupt growth, hurt fiscal consolidation efforts. They even see downside risks to their 5% growth forecast for Malaysia this year.
A reminder of the macroeconomic stakes involved. A rating downgrade could increase borrowing costs.
It highlights how crucial navigating these global trade issues effectively is for the whole economy.
Back to Tech Malaysia and ARM. There are now criteria for local firms to access ARM's chip design framework.
Yes, part of their collaboration. Companies need a detailed product roadmap, proof of steady cash flow, things like that.
The goal being
To build local chip design capability. Get Malaysian companies designing their own chips, maybe even GPUs eventually. Long-term strategic vision.
there was also a reaffirmation with Japan on decarbonization.
Right. Malaysia and Japan committed again to the Asia Zero Emissions Community, or AZEC initiative. Former Japanese PM Kishida visited. Focus on sustainable growth.
Shows continued international cooperation on climate goals.
Definitely. Japan aims to contribute significantly to funding decarbonization in Asia.
And Steel is partnering on carbon capture.
Yeah, with Kellington Group and University Tunku Abdul Rahman, developing technology for greener steel production. They even mentioned potentially trading captured coero.
Interesting industry-led innovation there.
Shows companies are looking for sustainable solutions and maybe new revenue streams, too.
Last point here, Hong Kong is trying to attract more tech listings.
They launched a new scheme, smoother listings for tech and biotech firms on their exchange, aiming to get more Chinese companies seeking offshore funding.
Competition between financial hubs is always fierce.
Hong Kong trying to maintain its edge, especially for those high-growth Chinese tech firms.
Okay, we've covered a lot of ground. Malaysian companies, international trade wins, political responses. Thinking about everything today, what stands out as the most, well, exciting or perhaps significant news for Malaysia?
You know, what really strikes me is how proactive Malaysia seems to be. It's not just one thing, it's this multi-pronged approach. You've got the immediate practical steps like funding Matre to find new markets, a direct response to the tariff situation.
Right, tackling the short-term challenge.
Exactly. But then you also have these longer-term strategic plays, the push in semiconductors, the collaboration with AMD, setting criteria for accessing ARM's tech. That's about building future capabilities in a really critical global industry.
So it's that combination, dealing with the now, but also building for tomorrow.
Precisely. It shows resilience, adaptability, trying to mitigate the risks while also investing in high-growth areas. How effectively these strategies unfold will be fascinating to watch, but the intent and the range of initiatives are, I think, quite encouraging.
That was a really comprehensive run-through of some key financial and economic news today. We certainly hope this deep dive into the sources you shared has given you some valuable insights.
Hope so too. Lots to track.
Definitely. If you want to keep up with all these developments, do remember to subscribe to the Malaysia Money Matters podcast for more analysis and updates.
And it's worth thinking about, the potential impacts of all these shifts.
Absolutely. Like, what new markets do hold the most promise for Malaysian exports, given everything we've discussed? That's definitely something worth pondering as we see how these strategies play out. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.